Hello friends, as we know there is a complete lockdown in the country because of coronavirus, and this has resulted into a lot of inconvenience for taxpayers who had to comply with various provisions before the end of 31st March, that is before the end of this financial year. However, to mitigate this inconvenience, Government of India, Ministry of Finance has come out with a tax compliance package which has given many reliefs for the taxpayers so that lockdown does not affect them adversely. This relief includes extension of due date for filing of ITR for the year 2018-19, extension of date for linking PAN with Aadhaar. Both these dates have been extended to 30th June 2020. Also, the date for applying for Vivad Se Vishwas scheme is extended to 30th June 2020, and they need not pay any 10% extra if the form is filed even after 31st March. However, in point number 4 of that tax compliance package, which I am going to read shortly, there is a confusion created in the minds of the taxpayers and professionals. I will first read the provision and then we'll discuss about the confusion. So, the point number 4 of the tax compliance package as issued by way of press note by Ministry of Finance reads as under: due dates for issue of notice, intimation, notification, approval, order, sanction order, filing of appeal, furnishing of return statements, application, reports, any other documents, and time limit for completion of proceedings by the authority, and any compliance by the taxpayer, including investment in saving instruments or investments for rollover of benefit of capital gains under the Income Tax Act, Wealth Tax Act, Prohibition of Benami Property Transaction Act, Black Money Act, STT Law, CTT Law, Equalization Levy Law, Vivad Se Vishwas Law, where the time limit is expiring between 20th March 2020 to 29th June 2020 shall be extended to 30th June 2020. Now let us focus on that line which has created confusions in the minds of taxpayers as well as the professions. The line is, and any compliance by the taxpayer including investment in saving instruments or investments for rollover of capital gain under Income Tax Act and so on. The confusion here is that one interpretation is that only the investments for capital gains are eligible. Those who could not deposit their investments for deductions under section 80C, 80D are worried. In my opinion, you need not worry. The statement says any compliance by the taxpayer including investment in saving instruments. This itself is clear that whatever investments which were due by 31st March 2020 to claim the deductions under section 80C, 80D and so on, even if they are made before 30th June 2020, it is fine and the deduction shall be available for the financial year 2019-2020. Also, there is one more confusion in the minds of taxpayers that suppose the investment with respect to financial year 2019-20 is complete before the lockdown, and now a fresh investment, say of rupees 1,50,000 is going to be made in the month of April or May 2020, which I am supposed to claim in the financial year 2020-2021. Now, the confusion is whether this investment shall be treated as deduction for the year financial year 2019-20 or financial year 2020-21. Again, in my opinion, I think that it is up to the option of the taxpayer that investments made between 1st April 2020 to 30th June 2020, whether they are to be treated as the deduction in financial year 2019-20 or in the financial year 2020-2021. However, it can be claimed only in one financial year, either in 1920 or 2020-21. Hope the confusion is clear in your minds. Still, if you have any questions or if you wish to share the feedback, please do the same by way of comments below. Also, if you like the video, please subscribe to my channel and stay tuned for more updates. Thank you.